morning and welcome to VSA Couple of 5 Minute Morning Miner. It's Tuesday, the 7th of October. Morning, Paul.
Good morning to you. Good morning.
All right. What do you want to say? I mean, commodities still going up, aren't they? Gold's not quite gone through 4,000, but it's going to happen. Silver going to get quite close to $50, but it's going to happen. Tin's up at 38,000 now. So it's all still going the right way, should we say? Let's talk to a few companies. I'll tell you one that caught my eye, actually. Baker Steel Resources Trust had their NAV up. It's up a little bit. Was it tiny little bit in September? But actually, really, in this market, what's been going on with the gold and silver price, etc., in September, I don't think it was a very large increase, was it?
It was an increase of about 3% in its NAV as of the end of August. It's the September um, uh, uh, number. Otherwise, it has been moving pretty good here for most of the year as their internal portfolio investments have been rising in share price as well. And they've been having successful fundraisers too within those portfolio companies. So they're going to continue to have some strength, I think, for some time here. The main thing we'd like to see is Baker Steel have more money and otherwise capital to deploy. And it'd be interesting to see what kind of statement they can put out on that in due course.
That is the problem. As you say, they're tied up in a whole load of stocks that aren't necessarily performing as well as some of the rest of the market at the moment, which is quite a problem. But there we go. All right. What else, Paul?
We got Greatland Resources has come out with their preliminary production update for the September quarter. They'll put out their formal quarterly activities report on next Monday, the 27th of October. They'll do that. But one of the key points you can see here from the Telfer Mines production operations, that's where they get their cash at this point, is that they're really piling up cash now. Cash position now at $750 million, whereas just 3 months ago was $575 million, and there is no debt on the books at all. So that's a build of $175 million in just 3 months. They are on course for their 26 guidance on gold production of at least 260,000 ounces, with an all-in sustaining cost staying in that range of $2,500 an ounce. And they produced not quite 81,000 ounces gold and 3,366 tons of copper here in this quarter.
It just shows the gold price up here and how quickly you start absolutely generating cash. I noticed that Premier African Minerals has announced they're going to do a share consolidation, i.e., sort of 1 for 10, but they'll still end up with 8.5 billion shares, which is remarkable, really. And also, Paul, it's maybe worth just pointing out RioTinto, Mitsui, and Nippon Steel. They're going to do they're going to invest between them $733 million. To develop the West Angelas, I've probably announced that wrong, project, part of the Roby River joint venture. Do you want to explain
Yes,
that?
that's right. It's in West Australia's Pilbara region, and they are joint venture partners in this Roby River complex. And what that is intended to do is to bring even more iron ore individual deposits into production for this West Angeles, which acts as a hub location for processing for them. And this would make sure this investment is essentially sustaining capex investment to make sure that they can stay at a 35 million tons per annum annual production capacity for an extended number of years here.
Yep. Okay. Anything else?
Only to say that the cobalt production out of the DRC that is due to become covered by a annual quota system as of October 16th. And now the government is mandating that specifically because we're looking at a current 9-year low in the price of cobalt, simply too much cobalt getting exported at the moment and really suppressing prices. So the DRC wants to get control of that. They'll allow a further 18,000 tons by the end of this year to go out. But with a quota system, that should gain more control over just how much volume of cobalt ore is getting exported. Glencore, major producer, compliant producer in the DRC, is happy to see this quota because they have mandated market share under existing contracts. The Chinese, on the other hand, do not like this quota system because under a rush for critical minerals sort of a scenario in the world, and with excess treatment capacity within China, they would prefer that the prices were as cheap as possible and for them to onshore as much ore as possible for an extended period to support those processing plants. So there we have it.
All right, sounds good, Paul. Thank you very much. I think that'll do for today. We'll be back tomorrow. Thanks.
Very good. See you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.